You said, should it be full reserve? I don't necessarily argue for gold or silver. I'm really not a gold and silver advocate. I'm an opportunity advocate. And right now we do have an opportunity in gold and silver because the world has been set so badly out of balance. And when the rebalancing happens, gold and silver have a lot of catching up to do. When they do, you're gaining in true purchasing power. But the difference between a system where you imagine dollars into existence to buy this house, the bank just imagines them, you're committing fraud, theft, you get enslaved for 15 years. When we used gold and silver are called honest money for a reason. If you want to buy a house, you have to work for a certain period of time to save up a certain amount of gold coins that you're going to buy that house with. The work that it took to do the prospecting, turn that find into a claim that is turned into a mine that mines the ore, and you got to move more than 30 tons of earth or ore to get 1 ounce of gold, 30 tons per ounce. And then make that into bars, melt the bars and mint them into coins. That amount of work equals the amount of work and effort that you had to put in to accumulate them, which equals the amount of work it takes to chop down all the trees, turn the trees into timber, dig up all the cement, dig up the copper ore and make copper and then pay people to build this house. And it's 3 transactions. Your transaction of doing the work in the middle, the transaction of all of these things that come together to actually make the gold coins, and the transaction of all the things that come together to make the house. They're equal values. It's a fair trade all the way across. With currency, it is fraud, theft, and enslavement. There is a big difference between money and currency, and everybody needs to start defining the difference. We need to start using proper terminologies here. I've been trying to do this since 2006. It's hard to call currency and money, but money must be a store of value. Any gold-backed currency or gold standard is just another scam where they can it gets the foot in the door again to start this fraud and theft. It starts out fully backed, like we did with the US dollar when we issued treasury notes.
Right.
That was an IOU for money, and it was fully backed. Then we established the Federal Reserve, and it only required that they be 40% backed. So you could put $50 of claim checks in circulation for each $20 worth of gold. That's a 40% reserve ratio. $40 of gold backing up $100 of gold claim checks in circulation, because that's what the dollar was a claim check. It was not money, and it said so right on the bill that it wasn't money. And in the beginning of my book, in the first chapter, there are some pictures of different notes that we used to have in circulation. And the treasury notes would say there have been deposited in the treasury of the United States $10,000 in gold coin payable to the bearer upon demand. And then the Federal Reserve notes, and so it's a note. A note is, your IOU, right? And the Federal Reserve notes said that they were redeemable in gold on demand at the United States Treasury. So that's the Federal Reserve saying, well, here's my IOU, the neighbor will pay it.
Right.
And because the Treasury isn't part of the Federal Reserve, or in gold or lawful money at any Federal Reserve bank was the Federal Reserve note. So that's an admission that this note was not money. It was payable in gold or lawful money. What was the lawful money? That was the Treasury notes that were 100% gold backed. And so right on the bill, it said, this is not money. It's an IOU for money. And that's how this whole thing started, was with a gold standard. And these standards, they cheat it, and then the cheating builds up energy and creates this emergency. There's something like the Great Depression. Now, it's immoral to use something that is empty and has no, loaning somebody nothing and then expecting to get paid back something is immoral. Loaning something and expecting to be paid back with interest is moral. I lost my train of thought here, but a gold standard opens up the window. If we used gold, and you can digitize gold these days, we could have representation of nanograms or milligrams of gold in our phones and be able to pay, and you're paying for something with something. Right. The US, when you look at what the digits in your bank account are, Bank of England says those digits are a reminder to the bank that the bank owes you IOUs. And that's exactly what they say. The bank owes you IOUs. What are the IOUs that it owes you? In the United States, it's Federal Reserve notes. And that's an IOU. So you dig down deeper to try and figure out what that IOU is. And on the Federal Reserve's balance sheet, their liabilities are the IOUs that they've made that are in circulation. We had an honest system. No, you don't necessarily need full reserve. We used to use gold instead of the bank paying you interest. If you wanted to take out something that threatens their balance sheet because they had made a loan of gold coins that actually did exist to somebody that wanted to buy a house or build a house, you would pay a small penalty for that. And it worked. We didn't have FDIC insurance then. FDIC insurance, though, I'm not sure of the morality of that. One of the things that in studying the monetary system so intensely for so many years, trying to write my book, The Great Gold and Silver Rush of the 21st Century, you just come across the immorality of everything. We are totally enslaved by this monetary system, and there's this small group of people that get to ride for free in society. The elites and their buddies we've got this system that benefits the few at the expense of the many. And it is just so immoral to have the world population really enslaved just to do this wealth transfer to the few that get to run the game.
This is the thing that I started with my first book, was differentiating between money and fiat national currencies, because the national currencies are not money, and people need to start differentiating these two things, calling them by their proper names. Money cannot store value currency cannot store value. Money does store value. I've got a silver Pegasus coin on my desk that was minted in roughly 500 BC. And if you melt it down, it still has purchasing power. The silver in it, the content, still has roughly the same purchasing power as it would have had back then. They bounce up and down in a range, but precious metals are the only thing that have proven themselves over the centuries to be money, a store of value. If you go to the Federal Reserve's website or any other place and you look up the definitions of money, what are the attributes that money has to have? And even the Federal Reserve, the very first thing they say is it must be a store of value. And then they go on with the other things, a medium of exchange, a unit of account, and so forth. So a store of value is the most important thing. So if somebody thinks that their currency, their national fiat currency, the US dollar, the euro, the yen, the pound, whatever, if they think it's money and they tell you, no, our currency is money, then ask them, does money need to be a store of value? Is that one of its functions? And they will say yes. Then ask them, is there inflation? If they say yes, then ask them, aren't those two things mutually exclusive? If it's storing value, how come prices are going up and it's buying less the next day, the next year? The way currency is borrowed into existence, national fiat currencies, they have to lose value. It is not possible for them to maintain their purchasing power over long periods of time. And it's just a function of the math behind borrowing currency into existence and promising to pay it back plus interest, And the currency to pay the interest doesn't exist yet. You have to borrow that in the future.